You are going to take your next trade here pretty soon. And before you do, I want you to try this. I just want you to give it a go. It's going to be a very simple list of things that are really common sense. Unfortunately, from what I've seen today in the Forex trading industry, common sense is not common practice. I see so many people doing so many things that do not matter at the cost of things that do matter. I want to teach you what I believe does matter. And the reason I get to speak from this is because I've been trading for 8 years. 6 of those years have been profitable. And on top of that, I've been calling every single trade that I take with the full analysis, P&L breakdown, showing my accounts, my terminal screenshots, literally everything for the past 5.5 years in my free Telegram channel. Which after this video, for F's sake, watch the video first. After this video, you click the first link in the description. It'll take you to my website. Then you can click the free Telegram channel button. There's like 57,000 people in there right now looking over my shoulder. And I'd like you to join me and look over my shoulder after hearing this video. I'm going to show you everything first you got to focus on. This way you can keep things simple. So that being said, let's just jump right into it. I'm talking to those of you who are going to continue trying to learn trading without giving up. Because unfortunately, most people lose money trading because trading is risky. It's just, most people just completely fail at it. For those of you that are taking the time to actually apply yourself and give 2% of a crap to actually learn things, this video is going to be so freaking simple. We're not going to cover smart money, order block, Wagyu beef bullish, candlestick closure, fair value, distribution gap, liquidity spike, RSI, volume oscillator profile. We're not going to do anything wild in this video. This is common sense that you probably already know. I'm just here to remind you that these are the things that matter, and I don't want you to do anything else that doesn't matter. It's just my opinion. I've been doing this 8 years. I can speak to it slightly. Let's get into it. I'm going to share my screen. We're going to go here to TradingView. Super high production quality. The first thing I want you to ask yourself is, why are you taking this trade? Before you hit that buy or sell button, I want you to ask yourself, why am I taking this trade? Here's a little general rule of thumb, not financial advice, just a general suggestion for information purposes only. The reason is because I believe that if you cannot sum up a trade in one sentence or less, you probably shouldn't be taking it. Now, I know I'm just going to get crucified. People are going to come to my front door of my high-rise building with pitchforks and torches, screaming at me saying, Nick Sean, trading is not that simple. There's no such thing as just a simple trading approach. Here's where I beg to differ. When I trade and people ask me, hey, why'd you take a trade? Oh, it's a break or retest of that support resistance zone. They're like, okay. Must be something else, right? Did you look at the volume profile? And I'm like, no, it's just a support resistance zone. Price broke below it, and it came back to retest it, and I sold. Okay, here's another one, all right? Why'd you take that trade, Nick? You took a sell. I don't know. I'm trying to figure out I'm looking at the RSI divergence, and I'm over here looking at the fundamental news event, the news release that just came out because of CPI data for Australia, and I fire a gun in the air, and everybody runs around screaming, and then I get on a microphone, and in a smooth, slightly low-pitched, sexy voice, I say, I took the sell because price was in a downtrend, and it pulled back. And everyone, I have to drop my own mic because everybody ran away because I was firing a handgun into the air. Probably won't actually do that in real life, but you get the point. So it's so simple that a lot of people lose track of everything they're doing. So for the next trade that you take, it should be simple enough that you can explain it in one very short, neat, tidy sentence. It should be such a clean sentence that people will think that you use soft soap to write that sentence because of just how squeaky clean it is. Well, wash my hands after having cigars. The second thing we're going to go over. What are you risking for this trade? You should be able to define your exact risk for every single trade that you take. It doesn't matter what it is. It could be $10. It can be $100. It can be $1,000. It can be $6.9 billion. You probably run into liquidity issues, but you get the point. You have to define what it is you're risking. If you can define exactly what it is you're risking, you know where you're entering at, you know where the invalidation point of your trading idea, some people would call this the place you put your stop loss, and that distance you can calculate what lot size you should use using a position size calculator. I have another video about this. You can go search on my channel, Nick Sean, how to choose the right lot size. It's a whole video about it, literally teaching you everything. But make sure that you know exactly what you're risking for each trade that you take. It can be anything you want. You need to define that. This is where it gets important. What's your plan if price goes against you? So if price does in fact go against you, what are you going to do? There's a couple ways that you can manage a trade that goes against you. The first and most popular thing to do is just to close the trade at a loss. It doesn't matter if it gets all the way to your stop loss area or if it's before. At any moment you think the trade is no longer likely to work out, simply close the trade. Remember, whenever you set an entry and you set a stop loss and you set a take profit, these are not black and white absolutes. These are general guidelines about what you've arbitrarily and subjectively decided you were going to do if price goes one way or the other. It's 50-50. You don't know what's going to happen. The whole point of trading profitably, like any other form of gambling, which let me remind you the definition of gambling is placing a wager on an uncertain outcome. If that isn't trading, I don't know what is. You don't need more than a 50-50 win rate to make money trading. You could literally just be right, no better than random chance, 50-50, and still make money if you have structured your risk and you have a simple trade management plan for what you're going to do if it goes against you. Say you enter a sell at resistance. Price tries to bounce at the resistance zone. It comes right back up into the resistance zone. Tries to bounce again, but makes a higher low. Comes back into the resistance again. Tries to bounce, but just bounces a tiny amount. Makes another higher low and comes right back up. And it's just clustering with higher lows up into the resistance zone. Let me give you a word of advice. It's not working, bro. You should probably close the trade. And you don't have to hold it to your stop loss zone. Now, you may be wondering, Nick, how do I know when to close the trade? Because there has to be some sort of reason, right? You're looking at the candlestick closure. You're looking at the medium rare Kobe steak Japanese Wagyu beef candlestick closure at the zone to determine the exact liquidity for the price actions of engulfing from the previous three candles. It's none of that. Guess what? You get to just look at the chart and without doing anything fancy, just ask yourself, do I think this is going to work out? Do I legit, if I'm looking at price and I was getting in, if I was right, it would have just started going to profit, right? If you get into a trade and it starts going sideways, close the damn trade. It's not that big of a deal. Take the loss. It's most of the time it's break even or a small loss. Every now and then it's going to actually go and hit your invalidation / your stop loss, and you're going to take a stop out. But even if you took the stop out, you've already defined what the risk was for the trade. That being said, let's go to the next one. What's your plan if it goes into profit? Now, this is where things get really fancy. You're going to see this in my Telegram channel after you join at the link in the description. After you finish watching this video, don't click away. Oh my God, please just stay a little bit longer. We're almost done here. We're like halfway through. Now, if price goes into profit, what are you going to do? There's a couple things you could do. You could close like an absolute wussy immediately after it goes into profit. You just close. It's in $100 profit. I'm out. However, if you're closing before price even gets to a 1-to-1 risk reward, you're not setting yourself up to even break even long term. So in my personal opinion, of 8 years of trading experience and having called every single one of my damn trades live for 5.5 years in my free Telegram channel, I think that you should just try to hold trades at least to a 1-to-1. Then you decide what to do. So here's what you could do. You can add to winning trades. This is a great characteristic of profitable traders that I do not see very often. People close their trades in loss. People close their trades in big loss. People close their trades in small profit. I do not see many people saying, wow, now that I have a winning trade that's working, I think the final target's going to be way somewhere up here. Say it's like a big trend, right? You bought the pullback. It goes into a little bit of profit. Everyone gets out because they're scared. They're like, oh, all right, I got some profit. Let me just take it. And they say stupid crap like, oh, bro, you're never going to go broke taking profits, bro. It makes me want to fire a handgun into the air. In a legal way somewhere where that would be like, maybe it's like a blank at some sort of a gun show or something like that. But you get the point. It makes me want to do so many slightly insane things when people say you're never going to go broke taking profits. You are going to go broke taking profits, bro. If your profits are tiny and your losses are much bigger, even with the 50-50 win rate, you're still going to lose because whenever you lose half the time, they're bigger than what you make whenever you win half the time. You cannot, in my opinion, be profitable long-term by consistently taking tiny profits when you have the potential to go into big drawdowns regularly. You might get lucky here and there and get an account to a growth target and then withdraw before you blow the account. But long term, I just don't think it's a good approach. Here's what's so much easier, not mentally, but easier to actually stay profitable. When you have a trade and it begins to go into profit, add to that winning trade. You may have entered a trade here at a resistance and you have your stop loss up here. Price goes down to here. Guess what? If that's the peak that it's just made and it's going to profit, you can add a second position. Then you can just drag your stop losses down. So that way, if it goes against you, you're losing maybe like the same unit of risk you had planned for anyway. Because in your first trade, say you risked $100, that goes into profit, you add to the winning trade. If it goes back against you and still touches the zone, it's still technically valid. If it breaks above the zone, it's invalidated. You'll lose a little bit, right? But it's typically going to be within that risk constraint that you define. If you're only adding when you can drag your invalidation / stop loss closer to your entries. If you do that, I could just hear it in the comments. I could see it. You're like, Nick, that's just stupid, bro, because you're adding as it's getting closer to your profit target, bro. So like, then it's going to immediately when I add, it's going to come back and stop out my entries at break even. It doesn't work. I'm going to go back to just sitting in my parents' basement, just watching weird stuff all day on the internet, and then keep not adding to my winning trades and then closing my trades in a tiny profit the moment I get any profit at all. If you want to keep doing that, be my guest. I'm just saying, the people that I see are massively profitable. They cut their losses really quickly and they add to their winning trades. This sounds so cliche, but what are you going to do if your trade goes into profit? In my opinion, if you still think there's some room for it to run to a final profit target in a trend, like a lower low, if it's in a downtrend, or if it's in an uptrend, a higher high, if you bought at a major support level and there's a big resistance zone further up, if you think it's likely to go there, not only hold your trade, but add to it. Because as long as you can adjust your invalidation and stop loss closer, if it goes against you, that'll happen half the time, right? Price goes up or down. You don't know what's going to happen, but you're going to take roughly a break even on those or a small loss. Whenever you have those few trades every now and then that run into huge profit, or if you have like me regularly, I've been in an insane win streak the past 2 months. Last week alone, I made $75,000 from Forex and crypto. What am I doing? I'm entering trades with no better than a 50-50 win rate, and I'm adding to my winners and I'm cutting my losses short. I lose half the time and I win half the time. The half the time I lose, it's a small loss. The other half the time when I win the trades, it's a bigger profit of at least 1 unit of what I risked. Oftentimes I can make 2, 3, 4 times whatever it was my original risk was simply by adding to winners. If price moves to your final target, you're in 1, 2, 3, 4 positions, and then you have a huge profit. Obviously, there's nuance and subtleties to this. You have to test this. You have to track your trades in a simple trading journal. You could literally open up a Discord server with just you in it, post a trading view link to the trade that you took whenever you take it, and then follow rule number 1 here in this video. Have a 1-sentence, really simple explanation. You can be a complete degenerate and write it in all lowercase levels without even proper lowercase letters, without even using proper punctuation. You can just say sold because it was a downtrend and a pullback. Bought because it was at a major support level. Like something stupid, right? Something so simple that a caveman could do it, right? But there's probably no cavemen probably had trouble trading the financial markets back then because there wasn't financial markets. But in any case, you got to keep it really, really simple. If you do that, and if you add to your winning trades, they tend to be more profitable long-term, provided you take the time to get the experience to learn. And you can do that by just tracking your trades in like a Discord server. Do more of what works and less of what doesn't. Now, do you accept these potential outcomes? If you enter a trade and you've done everything here, why are you taking the trade? I bought it. I'm buying at support. That's why I'm taking the trade. What are you risking? I'm risking $100. What's your plan if it goes against you? I'm going to monitor it, and if it goes sideways, I'll probably just get out if it doesn't look like it's easily going into profit, because if you're going to be right, it'll usually go immediately. If you're wrong, it'll normally range, go slowly against you, screw around, go sideways, back and forth, all this stuff. If it goes against you, it's usually better to just get out. If it hits your stop loss, that's okay too. If it just immediately breaks the zone, hits your stop, perfectly fine. What are you going to do if it goes into profit? You can do whatever the hell you want. My 2 cents here, literally it's 2 things that are, my 2 cents. It's kind of a cute little... It doesn't matter. Okay. The first thing is that I would hold the trade, and the second thing is that I would add to the trade, provided that you can drag your invalidation and stop losses up closer to your entries underneath like the most recent little higher low there on the lower time frames. That way, if it breaks out of that trend, it's okay. You take the small loss or break even or whatever. But if it goes into profit, then not only can you hold those positions too, but you can add a third and a fourth. You'll get used to this with time. So then after you've analyzed all this, right? Why are you taking the trade? What's your risking? What are you going to do if it goes against you and into profit? Ask yourself, do you accept these potential outcomes? If the answer is yes, take the trade. Place the trade. If the answer is no, this may seem very crazy of a concept, but don't place the trade. If you've pre-planned everything, right? It's like a game of chess whenever you're trading. You get to make a decision before there is an outcome. And after you make that decision, the outcomes occur. Before your next move on a chessboard, you're looking at the pieces. You're saying, if I do that, what is the other person going to do? Guess what? In Forex trading, stock trading, crypto trading, whatever assets you want to trade soybeans. If that's just your thing, you just like trading, you like trading soybeans. I know people who actually do that. It's really crazy. Whatever it is, the other person is the market. You get to make a decision. You get into the trade once you click in. there will be an outcome. It's either going to be a profitable outcome or a losing outcome. Most of the time, every now and then, right, you'll have a break even or like a tiny profit, tiny loss. That's pretty much break even. But you're either going to have a profitable outcome or a losing outcome. Ask yourself if you accept that outcome. If you don't, and you think it could go up here to that next resistance zone, and if I'm entering here, my stop loss has to be all the way above that, and then it gives me less than a 1-to-1 risk reward ratio just going into the trade if I'm taking profits at the next zone, it might just be better to not take the trade. What a genius idea. It might just be better to just wait for price to go all the way up, and then if it goes to the resistance zone, then I will take a sell, because I can enter a sell there, put a stop loss above, and get at least a 1-to-1 for a potential easy target if it goes to the next zone. Maybe it's even like a 1-to-2, 1-to-3, right? You never really know at the beginning of a trade. All you know at the beginning of a trade is how much you are risking. That is why it's literally the first thing here after like having a basic framework for like, why are you taking the trade? The first thing here is, what are you risking? If you do these things over and over before you take the very next trade that you're going to take, whether it's today, whether it's tomorrow, whether it's literally right after this video, you're like shaking and sweating and can't wait for the video to be over because you're about to go place that trade. If you do these things, I think this sets you up for a little more success than 90% of traders. That is just my opinion. This is not financial advice. This is a general suggestion for entertainment and informational purposes only, since trading is risky and most people lose money. That being said, if you like this video, just be sure to just, do whatever the hell you want to do. I don't care. I'll see you in the next one. Cheers.